Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return is please refer a friend, or I'll hit you in the face with a brick. What? I can't say that? Today we're going to be discussing the breakaway gap. This is not as common as the common gap, but it's one of 4 different types of gaps that you need to know about. The breakaway gap has a few different elements to it that you need to learn to spot. The first of which you need to know is that a breakaway gap, unlike a common gap, is not likely to fill in the short term. So traders who are looking to trade the gap fill should stay away from a breakaway gap in those cases. A breakaway gap has first some type of support or consolidation period where price activity was within a trading zone or trading range, and it just consolidated. And that was basically where buyers and sellers were kind of agreeing on the current price. They weren't pushing it higher, they weren't pushing it lower. In this particular case, you can see we had an ascending triangle formation going on. It is a bullish formation, but it's still a consolidation formation. Price activity was just head right up to here and pull back, and just kind of consolidate, moving sideways on low volume down here. Okay? All of a sudden you get what's called a breakaway gap, where the stock breaks out of resistance. Here's a resistance line, breaks out from this close up here and starts to advance, and it does so on increased volume compared to the previous volume levels. Okay, it is very important to note the volume level. It should be increased volume to confirm the breakout, and this is true for both bullish or bearish breakouts. So had you been consolidating and then broke to the downside, you'd also want to see a volume increase on that as well. Typically, it doesn't have to be, but typically you'll have some kind of a news event or some reason for this breakout. It can happen. And it doesn't have to every single time, but you will see that volume to confirm it. These oftentimes can be mistaken for runaway gaps. They look very similar, but the main thing between a breakaway gap and a runaway gap is neither one of those are short-term filled. Oftentimes, even if price does, after an advance, does start to pull back towards the gap, it will not fill. It will act as in this case, a support and push people off of it. Think of it like this: if you were long this stock back here in February, and all of a sudden some news came out that they were doing better than expected, their better revenue or something of that nature, all of a sudden all the people out there would say, oh, I really want to buy it now, and so they jump on the trade, and that causes this gap to happen here. And also you've got a lot of people who might have been short at that time were trading on the wrong side. They're covering, so that's adding that much more pressure, and you get it driven up. Then when you start to pull back towards the gap area, people are thinking, well, why would we be back down here? That doesn't make any sense because we have all this good news, so they continue to push it higher. That's why you don't get that breakaway gap filled anytime soon. For those of you who are, let me clean this chart up. For those of you who are looking to actually trade a breakaway gap, what you'd want to do is either take the initial position on the breakaway gap as long as it was confirmed by volume. You'd want to be a buyer there, or on any pullback that came close to that level, you'd start buying again. You can see that's what was going on right here. The 2 main elements to note regarding a breakaway gap versus a common gap would be the breakaway gap would have a consolidation phase or a period before you had that breakaway. That's why it's called a breakaway, to break out. Then you would want to see that on increased volume. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.